Welcome to the S&P 500, and just want to walk through a few possibilities here in terms of the structure. And as you know, we've been looking at this in terms of an A wave, a B wave, and a C wave here. And if that's the case, this would be corrective, then eventually a new high would be made here. However, until we're on top of the 1700 here, or we see a particular wave structure in this point here, we can't call it bullish just yet. It has the possibility of occurring as such, but we also need to look at the other side as well, and that would be this would be down for wave 1 here, this back for wave 2 here, and then in a smaller way this would be wave 1, wave 2 here, wave 3 here, wave 4, and wave 5, coming down for a larger A wave, B wave, and C wave down through to here. So that's a real possibility. So we're working closely in through here, and if we start to pull that apart a little bit, then this is how it counts so far. If the 1700, if that moves straight up there and above this high here, then it's confirmed that we'll be going up from that point there, so it's got to take that out. But as it stands, it's still got that bearish bias, so this can be down for this wave 1 here of this degree, back for wave 2 here, and then on a smaller degree, as I just mentioned, this can be down for 1, which would be in this little bracket here, then an A and a B and a C wave here back for 2, and then wave 3 down here moving pretty quick, and 4 and 5. So it does make this whole area here pretty critical, really. So first of all, at first glance here, if this was going to be an impulse structure to the upside through here and go further up, then this low here needs to stay in place here. If this low is broken, then this would be the short trade through to here, and there's a couple of ways of looking at that. So this is the structure on a 15-minute chart here. So we can view this. It does have a bit of a positive ring to it, by the way, because this C wave here coming up through here is quite sharp. It's sharper than the A wave here. Normally in corrections, if I can just go over that for a second, it's just a sort of personality thing. So if we're looking at an A and a B and a C correction here, then the C wave here is normally lazier than the A wave going up here. So this A wave here and this one here is much stronger. So in this case, it's really got the personality of the structure here of a stronger bullish structure, because with a bullish structure you'd see wave 1 here, wave 2 here, and then you'd see wave 3 being stronger like this, and then wave 4 and wave 5, and then the A, the B, and the C, and then up again. So it does have the personality of that structure, but as I mentioned, taking this low out here at 1682 would create shorts. Now there's you don't have to wait for that to occur. That's just one way of getting in. We could look at the 1690 here to become a retested resistance. So we wouldn't trade this. If I can just move this out of the way for a second and put a line in through here just as an example. So when we're trading, so if this was going to come down, this may even have a little high here first and then come down. And when it does come down, it should have some sort of bounce, which shouldn't really find support back on group 1, which group 1 would be 1, 2, and 3, so 1693. It should fail. It can trade above that, but it shouldn't find support on that. But a bounce off here, so this moves down. We never chase that when it breaks a level like that in this particular level. We don't chase that. We wait for the retest here to confirm that it is weak and the sellers are moving down. We can take it there. Of course, you can get into it earlier there. If you understand group 1, well, then you'll know that you can start feeding trades in once the 92 has become the retested resistance and build trades all the way through here if that's going to be the case. This particular move coming up through here at this stage here, it does look like it's incomplete in terms of 5 waves. So the 1, the 2, the strong third wave here, the 4th wave and the 5th wave here. So there's a little bit more to go there anyway. So even if that does move up there in a positive way, then that would be an A and a B and a C, and that would move back 61.8% or thereabouts from there. So we shouldn't see the 1690, 1688 breached in this case. So we should see that move up there, then back into here, and then up through the 1700 if it's going to be positive. So, there's plenty of space here that you can see that, if the market gets sort of top heavy, so to speak, and, and starts to move down and lower highs and so forth. So a bit messy, but you got the general idea, and that's the same for the DJ as well, the Dow Jones. So, at this stage here, we've got this 3-wave structure here, which is corrective, but it's only corrective if that top gets taken out here. So we would need to see a move up through there to, confirm that that is actually a corrective pattern. So in the meantime, we need to be mindful that the 15,500, 5 is the second strongest number in the market, 1 is the first, 5 is the second, 8 is the third. So, this is psychologically a very strong, situation here as support or resistance, and this can certainly be a failed retest coming back up here as an A and a B and a C, as it should be doing if we're calling this down for wave 1, ABC back for 2, and then the third wave down. If that's going to happen, that's going to move quite quickly, so you don't want to be caught off guard there. Okay, for the Australian market, we're pushing higher because of base metals, and this is the structure how I see it. So in a bit of a nutshell, we've got look, the bottom line is that the 5,200 here is the next resistance. Base metals were softer overnight, while steady. Some were up, some were down. Precious metals were softer. Well, gold was quite soft. Silver quite holding its own quite nicely. CBA, the other, between the sectors, the mining sector and the finance sector, well, base metals were softer, so no huge moves there. The finance sector, well, we've got CBA going ex-div today, so that's going to be a bit of a negative on the opening, and Wednesday's is what I call a V-shaped day in a market where intraday it can open lower and close higher, and then Thursday's normally the bear day. As long as the bear day is on lower volume than the previous day, then that's a bullish sign. Then we'll see further upside from that. But that said and done here, what we're looking for here in terms of wave structure is, well, the levels first. I'll just go in intraday here. But look, first of all, we can see that this is up for wave 1, back for wave 2, and we're looking for wave 3 up through here. So we're expecting Wednesday and Thursday to give us some sort of choppy situation here as such. And then we'll see a larger correction, because after 5 waves, we get the counter trend here. So our target here was 5172, and that's been reached from this point here. So that's all group 2 stuff, 65, 72 and the 80 here. So between, there's a lot of new people on the service, so from 5,100 to 200, 100 to 200, minor level 1, minor level 2. Then we've got the sub-levels in here, and the sub-levels are, well, group 1 here is basically 1, 2 and 3, and then the midpoint here is 5, and then group 2 here is 65, 72 and the 80. There's a lot to learn about each of these 3 points here. There's a lot to learn in terms of a market heading going long and also using them to go short as well. But in this particular situation here, we would have the group 1 above here would be 10, 20 and 30. So this is normally the range. So when we're looking at the closest largest number, which will be the 5,200 here. We'll normally see the arrival. We'll see some sort of reaction here. Normally the group 2 here becomes the support if the market pushes higher there. As long as it doesn't find, it can go higher, but normally it stays within this area here. And then this would be the range of any swings that occur in here, with the 5-2 being the balance line in through here. If we're ever wrong here, then if this if the top of group 1 here ever finds support as such, then we'd be looking to go long from that point there up to the midpoint, the 50. So that's the point of recognition where we're wrong, and that's how we deal with it. But otherwise, in normal circumstances, we would be looking for a range within group 1 and 2 here at group 2 here. So most people that make money in a trend will give it away in the correction here. So it's important to trade it to the particular numbers, get out, allow it to go find another market, wait for this to mature, and then move in from that point, because the correction is well, it's the least understood thing, and it should be the most understood, because corrections take the money away from you. But more importantly, they are where the next trend is engineered from, so they need to be understood. In Elliott terms, there's 11 or 12 different types of corrections, but yeah, they can be broken down into quite simple ones. Alrighty, let's have a look at commodities. Okay, starting with copper, just on the daily chart here. I won't go intraday on this one, but look, the wave structure that we're chasing, as you know, is up for wave 1, back for wave 2, up for wave 3, and back for wave 4. Now, wave 2, be it simple or complex, however you want to see it, wave 4 should be more complex than this one here. So we can expect to spend some time here. We can see that sellers are in the market here in terms of these highs being sold off here. So we know supply is there, and we expect that. And, this is the top of group 1 here. So we normally get a larger correction in this space here. So this is going to put a bit of a damper on the commodities as such. Also stock as well, the BHPs of the world. So all those stocks will gravitate to their closest, largest number, and they will try and stick to those numbers. So just bear that in mind if you're in mining stocks, so to speak. But we'll be here for a while. But as I mentioned before, the bigger and uglier the correction is, the safer the next trend is. So accumulation and distribution through the trend. But of course, an accumulation point of view is just a broad concept. There's a lot that goes on in a correction, but I won't go into that now. So that's the story there. So look, we're still trending, but we're just having a pause here, and that could take 4 or 5 days, So, right, the gold market, it's copper's cousin, so to speak. We were looking at this wave structure moving up here in terms of 5 waves for 1, back for 2, nice strong third wave, back for the fourth. Commodities tend to extend, can more often than not extend in the 5th wave rather than the 3rd wave. But the important thing here to recognize is that wave 1 and wave 3 and wave 5 here, they're all expanding to the upside, aren't they? They're all like increasing in size, growing like a tree, so to speak. So it's not an ending diagonal triangle. It's not shrinking as it goes to the upside. Anyway, what we're looking for after 5 waves is a 3-wave counter trend, and this here is the 50 at the top and 61.8 at the bottom here, and it's on this level here. So look, it may not reach this level because this is where the volume supply is through here, and that's how market works. This is the support here, and then this is the support here, then this is the support here. So when a market comes down, it will come down and test the previous support, and it'll bounce back up, but a breaking of that support there will just simply bring it down to the next lot here. It's just a reflection of where people have bought and sold, and people are still there with those situations. So with that in mind, with volume in mind, with the price in mind here as well, as price points or as levels, the market needs to navigate around them, because of course people look at whole numbers first, then even numbers, then odd numbers, so orders tend to gravitate towards particular numbers. But in looking at this down through here, the C wave, we're looking for that in 5 waves, so we would be looking at it like this here. So from the top, we've got our A wave in 5 waves, the ABC here for the B wave. The C wave to the downside is looking like this, down for 1 here, back for 2. And the third wave down here is wave 3 here, is not complete. This is like a little wave 4 here, so that needs to come down to here first. I can't put that just here just yet. I can't put that there because I can see that's down for 1, back for 2, down for 3, across for 4 here, and now we're going into, you know, closing time and so forth. So I've got to shift all this across here, but it doesn't come across in 1. So we can expect that to come down to 3, back for 4, down to 5 here, and then work up from that point there. Silver's doing much the same as well. We're looking at here the other day for a setup in here, a classic trading level setup just within here, but this has also got sort of 5 wave structure up through here now. It hasn't pulled back as much as gold, but it may catch up, so yeah, just be sort of mindful of that. In terms of trading though, if it found support on 2150, the midpoint there, tested support, not just because it trades up, but the breakout's important, but the retest is more important, and it's got to confirm that it has got support at a particular price point, and you need to focus what that price point is, because you need to put your stop under that particular price point. That's where the volume is, so you need that protection there. So, but in the scheme of things, after a long trend comes a correction, so that's what we're looking for here. But use the sub levels. Okay, the oil market. Okay, sorry about these lines, I should have removed them, but look, they're just time cycles, and just sort of looking, they seem to work quite well. So I was just looking, well, sort of lining them up with more so when the volatility, what time the volatility comes into the market as such as well. But look, anyway, what we're looking for here with oil is we've got wave 1, wave 2, wave 3, as you know, wave 4. This wave 5 here, I have to say, is a little bit dodgy because it's in 3 waves. So we may end up having a running correction where we have the A wave to here, the B wave to here, and the C wave to here, and support on the 106.50, which is very important for me anyway, but it's the halfway point between the 105 and the 8, the 108 there. So support, solid support on that midpoint, that 50 there, would see the price further to the upside. But as it stands in textbook style, we'd be looking for an A wave, a B wave, and a C wave back into the 50-60% sort of area through here. But normally when the B wave pulls up so high up to here, it means that the market is strong, and it's unlikely that this will play a part here. So we can just pretty much bring that back up into this area here, the same low here, and have a flat correction. A flat correction is just, it just stays within the range of the previous high and low through here. So anyway, keep an eye on that, and see if it follows stock and how it fits with the US dollar as well. Right, corn. Okay, corn just on the daily chart here. So we're looking at a 5-wave structure coming down through here, and this 5-wave structure that's coming down through here should bring us down at the 400 here, right? So from wave 4 here down to wave 5 here, looking at 80 points, because the extension was in wave 3 here, so that makes wave 1 and wave 5 about the same in terms of distance and time and so forth. So we've been drilling into this area through here, looking for, well, let's go and have a look anyway. So just coming back to this point here. So look, now we're looking for wave 5 of 3. Once we got that, then wave 4 should pull back to the wave 4 of 1 lesser degree. When we came down here, I mentioned that we will be going through a series of wave 4s, and it will get swingy within all of that. So what we were looking for here is that, well, we're looking for the low of wave 3 here, and I think this is down for 1, back for 2, down for 3, 4 and 5 for this little area here. So looking for a bounce off the 450 area to come back up to the fourth wave of 1 lesser degree. Now this wave 4 here should have been higher up through here and it didn't happen, so that's telling me that this particular market, like the euro, has shallow retracement levels in a bear market. So I'll just leave that there for the time being. The idea with dealing with all of this or handling the situation through here was that if we found support on the 72 there, then we'd go long from that point. So let's just have a little look at that here. This is a 2-hour chart. We really want to go to a smaller time frame. Let's just go to 15 minutes for a second and just want to go over how one would handle this situation, because it's always a little bit tricky. You know, it's easy for me to say support, buy on support, and, you know, should have done this and should have done that. But, you know, and I'm not saying that it's easy, but what we're looking for is we're looking for support. Now, support for me is something that's been retested. So if this was, say, this level here, oh, we can use this level here. So, you know, if the market comes up, this is the normal sort of thing here. And then comes back and has a little sort of correction here, ABC, and then finds support, you know, on here, then just in simple terms, we would check for that support there and then move up from that point there, and that would be the entry from there. If at any stage the market broke this, whatever level that you're working with, if it broke that support there, then you exit. Well, you may as well be short, but that's another psychological question one needs to overcome. Going, you know, realizing you're wrong and changing. So, but so in this terms here, we've got this pattern here was the classic trading levels pattern. This pattern here is the overshoot pattern, where it just overshoots this particular level, and then the distance it goes above is normally the distance that comes below. So, and it's done that, and it's done it in 3 little swings here. So then I would have seen this move up here, and I would have said to myself, well, that looks like 5 waves in there. I know that's tricky to see, but it is. So I would have been tempted myself to go long through there. But if I did that, then I would have had my stop here. The breaking of this here would have exited me through here. That's as simple as that. So that whatever level that you move into, that's got to maintain there. Yeah, anyway, that's that. Alrighty, let's have a look at FX. Okay, starting with the US dollar, the trend that we've been tracking is still unfolding to the upside, and the 82 would be the resistance up there, and once that's occurred, then we would be looking for a larger correction to occur through here. So yeah, that's the idea there. The group 2 here will be the support. As long as the 81.60-65 holds, then we see one more push up to there, then an A and a B and a C. The euro, I just want to explain a couple of things here, is that, you know, it depends on the degree of structure that you're trading. I mean, a lot of people talk in terms of, you know, time frames that they're trading, but talking in degrees of structure are sort of more important to me anyway, you know, because a degree of structure, you can be looking at it in terms of a 1-minute chart or 5-minute chart or an hourly or so forth. So it is the degree of structure, and one of the degrees of the degree of structure that we look at in terms of, well, Elliott is one way of looking at it, and the trading levels is another one in terms of look at it. And when we're working with price, you know, we always got to have a look at the closest largest number and break it down from there. So we've got this 130 here, which is the minor trading level, and it's the top of group 1, and the market is above that. Of course, we were considering this to be a rally through here in terms of down for wave 1, an A and a B and a C back for wave 2, and then we would see it work lower through here. So that's okay, you know, but at the same time, the market is, you know, buoyant, and it's because it's above the closest largest number. So we've got this here. Then the next step is that the next degree smaller is subgroup levels. So we've got 1, 2 and 3 here, and this is also the top of of subgroup 1 as well. And when you look at this here, this is a normal trading levels classic pattern where we have the arrival, the reaction, the first high above the level, and then the A, the B, and the C here. So after that's completed, if it finds support here, then I have no problems in turning long from this point. I want to put that sort of on the table because we can't become blind to the actual trend that we're in either. So we need to look at both sides here. In terms of the trading levels, if this midpoint here, the 2 within subgroup 1 here became the retested resistance, then we would have Elliott and the trading levels on the same side, and then that becomes more probable at that stage. So bearing that in mind, but as we're starting from here, this particular move down through here, let's investigate that a little bit further. So what we were looking for yesterday, as you know, we were counting this down here as 5 waves down here for wave 1, and we're looking for an A and a B and a C coming back up a bit higher here for wave 2. That wasn't the case, and then the market just obviously pushed down through here. And in terms of trading this, of course, you know that the breaking of a low here or the retest of the 133 here, then you'd be short. So you should have been short from that point. Now, what I want to discuss at this juncture is I want to look at 2 possible wave counts. Now, the wave count that we have so far is that we've got 5 waves down for wave 1 and then back for wave 2 in brackets. So the next degree smaller would be just get my drawing tool, would be from wave 2 here. I'll just take this back up here a little bit. So wave 2 here would see wave 3 coming down. Yep. So wave 3 would be down for 1, back for 2, down for 3, back for 4, and down for 5. That would make wave 2 down to wave 3, and then we'll have wave 4 and then wave 5 down. So that's the possible scenario that we're looking at, and we'll just drill in here in a moment. But I also want to point out too that this wave 2 never pull back up typically higher. I know that the euro can have shallow retracement levels, but it typically looks like a wave 4 here. So I just wanted to put in the fact that we can have wave 1 here, wave 2 to here, all of this wave 3 here, wave 4 here, and wave 5 here. And if that's the case, then we'll get an A and a B and a C wave back up into this area through here, and then we'll go down from here. So it's good to just sort of be mindful of these 2 scenarios through here. Because we got 5 waves here, in one way or another, we will end up getting more downside here. It's just that we just need to view these 2 scenarios through here. So that said, sorry about the weird picture there, but I'm just trying to find ways to express sort of support and resistance a little bit better, because as you know, we're using this circle here, and if we were looking for a retracement back up, the lower end here would be 50% and the top would be 61.8%. And but in this case here, I've put in the 38.2%, which would be the low of this ring, and then 50% of the high here. So it's giving us the 38, the 50, and the 61.8, but it's also giving it to us in a circle as well. And I'm also sort of looking at the distance from wave 1 here to the wave 2 here of the, being 38.2 and 50 and 61.8% as well. So I think using something like this may help us start to centralize the time and price target in just the relationship there a little bit better. So in this wave 2 here, down to wave 1 here, now we're aware that this could be the bottom of wave 5 as well. So we need to be mindful of that. if we're first of all looking at it as wave one, well then we would see this move down through here, which is in 5 waves, and we would see a 50-60% retracement level or 40 into this sort of area through here. We would be looking at 2 important things here. We'd be looking at yes, all this is important, whatever, but in terms of the actual market itself, is that the market moved quite swiftly through here as a wave 3. So this would be a point of resistance here, and of course the other one would be this lot here. So these are the real supply levels of resistance. So the market has moved up, hit supply, and the end of trading in US, so forth, so softer, people closing positions out. So we could be looking at this. See, this is also, this move here, if you look at it reasonably closely, it's in sort of 5 waves through here. So I don't think that's actually finished. I think that's 1, 2, 3, 4, and 5 to here. So if that is 5 waves to here, then we'll get a counter trend here, yeah, and then we'll get another 5 up here as the ABC correction, maybe even coming into this little level here. It would be good if, in terms of shorting, if the market moved above the 72 here, because if it after it's sort of done its little sort of non-trading sort of area through here in the Asian section, if it does move up through here above this very important number here, the 1.3272 here, the 72 number, in this case it's 272, which is stronger than just normal 72. So if it trades above here, then it's tested higher, and then if it locks under that 72 there, then we've got our short trade from that point there. Okay, so bear that in mind. So it's good if it retests higher as such. So yeah, and then comes back down and force back down, so to speak, and we can use group 2 here, the 72, 80, and 65. If this for some reason just fails, from this point here, then you would need to have that 50 there, the midpoint here, as your retested resistance, and then look for the short trade from that point there. But as it stands, this looks impulsive here. That's not quite complete. So we should see some sort of 3-wave reaction and then another move higher to this point here. So, and as I mentioned before, if this is the bottom of wave 5 here, not wave 1, then if this trades above the 72 there, well, if it does 5 waves up here, 3 waves back, then you can catch the next 5 up through here. But you would need to get out, once it hit the supply sort of zone in this little sort of area through here, because, it's going to struggle from here. But if it does push up through here and find support up into these levels here, then you know that we've got wave 5 here, and we'll be looking for a larger retracement level back up through here. Right. So the Australian dollar, from the high at 92, which is the midpoint within group 1 of minor group 1, so 91, 92 and 93, it's the pivot here. And normally when a market is stuck under the 92, then it has a stronger relationship and a stronger pull to the 90, the closest largest number. And I feel that's sort of where we're heading. And what we've got here so far is, we've got little 5 waves down here for wave 1, and then we've got wave 2 back here, then we've got wave 3 here, a little bit sort of dodgy because the wave 4 here overlaps the wave 1 here. So that's a bit, concerns me a little bit, but Forex can do that. But as it stands, we've got the 1, the 2, the 3, the 4 and the 5. Once we get 5 waves here, then we'll get an A and a B and a C as a counter trend. This is 38.2 and this is 61.8, and that would be the A, the B and the C here for the B wave, because we're working a larger triangle, and in this triangle coming down here would be looking for this structure through here. So yeah, look, that's what we're looking for. If we're wrong from this point here, we're not going to get this little rally here, and that would be because we've got this overlapping wave structure here, and that would make this as an A, B and a C here. So that means that I would have to put the little A wave to here and the B wave here to here, and then looking for further downside from this point here. But if that was going to be the case, once again, you would still need a really strong resistance against that 91 and then take the break. There will be a bounce off group 2 here. So you'd eventually need that there to become the resistance at that point there. So you need to accommodate working through that group 2 there. But as it stands, while that lower is in place there, then we're looking for the A, the B, and the C wave. May not go that high there, but you get the gist. If it does this wave here is important because it will be a C wave and it will be in 5 waves. So you should be able to figure that out and then start. The confirmation will be getting 5 waves to the downside and then 3 back up, and then looking to short that situation from there. Alrighty, well that's it. So good morning, good luck, and thanks for listening.